Now, once you have a working strategy, the next step is to trade it live with as much money as possible. No, of course not. Don't do that. And seriously, I've seen people do this. A strategy almost never works the way you expect the first time around. So you must always test and verify your strategy. And this is where you will spend the majority of your time. Unfortunately, many retail traders simply lack a rigorous enough testing process. So they think the strategy works and then they're disappointed when they take it live. There's a lot of mistakes you can make that we want to help you avoid. So let's talk about it. Hi, I'm Speculator Seth. This is the third video in a 4-part series about developing your own trading strategies. If you haven't seen the other videos, that's okay. Keep watching this video on testing and then go back and watch the previous videos on research and development afterwards. The next video will be on maintaining your strategies, which I'm going to have some really interesting stuff to share with you. So make sure you subscribe and hit the bell icon so you don't miss future episodes. Now, when you start the testing process, you should first keep in mind that testing is very time consuming. Rigorous back tests can take a long time to complete, and you're going to go through that process multiple times as you change things in the strategy. That's why it's important to develop your own gauntlet of sorts. Perform faster tests at the start that will weed out the majority of your problems, and then save the long time consuming optimization runs for the strategies that really deserve it. I always start with a small back test. I'll only run the algo on a few days worth of data and verify that the algo is behaving the way I expect it to. That means looking at the chart and seeing that it takes the trades where it should. You're always going to make mistakes or miss boundary conditions where the algo will do weird, unexpected things. It's better to get these out of the way first so that you know the performance data that you collect later on is actually meaningful. Once you are certain the algorithm is backtesting the way you would like, you can start throwing more data at it. At this point, it is important that you have a large enough sample size so that you can make real decisions from your statistics. Some problems just don't show up until you have a large number of samples. So I don't want to pick the largest data set that I have, but I want to have over 1,000 trades if I can. Monte Carlo analysis can also be really useful here to help you show how random your results can actually be. At this stage, I'll start pitting different entry conditions against each other and use machine learning to optimize parameters. I'll even export the results into other tools such as R, where I can do more sophisticated analysis than what I can do in the NinjaTrader 8 backtester. Such optimization tools can be very powerful, but they can also run a significant risk of overfitting your strategy to the data. You get a strategy that performs perfectly over the current data set, but doesn't survive against different backtests. As always, it is important to understand the decisions you are making. Have an underlying market theory behind the optimization that you're making, and use walk forward analysis to avoid overfitting your trades to the data. Once I am confident that the strategy is trading the way that I want it to, I start putting it through more rigorous tests. I want to run it against the largest data set that I can, and that's going to take some time. So I want to reduce the number of times that I have to do this test. My primary goal at this stage is to verify how consistent the strategy is against different types of markets. If the strategy performs differently on certain time periods, I want to understand why. For instance, many strategies that I have just don't work very well during the summer. Others perform really bad when there's excessive volatility. So this is where you can work out the strategy metagame behind when you do and you don't want to trade it. Again, overfitting is a risk here, but I think you'll find most strategies can benefit from some daily time frame filters. Just make sure that you're testing it against a variety of markets. Now, with backtesting in particular, there are a lot of mistakes that new traders will make. I would pay particular attention to the resolution of the data series that you're using. Say, for instance, you're only looking for 4 ticks and it's not uncommon for a bar to have an 8-tick range. In some situations, there's no way to know whether your stop or your target would get hit first without bringing in a more fine resolution. So in NinjaTrader, you can fix this by using the high fill resolution feature, and the backtester will bring in a more granular data series underneath to see what happens inside of the bars. I often find myself running with a 1-tick data series underneath, which is the most thorough. This makes the backtest take a long time, but sometimes it's the only way to get accurate results for some more high frequency algorithms. Also realize that there can just be differences between when a strategy is running live versus a backtest. For instance, it takes time for your algorithm to process. So if your strategy runs on a 1-range chart where bars only last for like a few milliseconds, there's no way that this strategy can get the price that it wants in live markets. It just takes too long to calculate, and then you have to factor in lag. This could affect any strategy that is based on bars that aren't time-based, so I avoid non-time-based bars. Also plays huge into any strategy that utilizes tick replay. Remember, tick replay is an estimate, and there could be small differences between when you're backtesting and when you're running live that could affect your entries. This is why the last part of your gauntlet should always involve the algorithm trading live data in an isolated sim account. Here you can verify that your strategy performs the same against live data as it does in the backtest. I would run things live for at least 2 weeks and review the trades that the robot makes at the end of every day manually. Every step of the process, you should look at the performance of your system. Of course, all the stats of the algorithm matter, and I talk about that in my video on expectancy and key performance metrics. However, there are a few key issues that I would look for in particular when doing automated trading. The most common issue I see is not factoring in the directional biases of the underlying instrument. If the instrument that you are trading has a tendency to go up and your algorithm likes to go long, then you're probably going to make money in the backtest. You're making money not because the strategy has an edge, but because of the directional bias of the instrument. This becomes a big problem when you run into a period where the asset isn't going up. And this is extremely common with many of the cryptocurrency robots that I see promoted online and particularly on TikTok. Profits fool the creator into thinking it works, even though the strategy isn't generating any alpha over the underlying instrument. So when the cryptocurrency market is no longer going up, they get decimated. Look at Sharpe ratios and compare the strategy to just buy and hold to verify that there's really alpha in your strategy. Make note of what your average and max winners/losers are, especially if the algo comes out with a higher than expected win rate. This is often because the algo is making money by taking on excessive risk, and this is always a problem when markets get volatile. Really big winners or losers could also indicate problems with fill resolution or other algorithmic mistakes, so I would go back and specifically look at those trades to understand what's going on. Next, keep an eye out for overtrading issues. It's not uncommon to have some sort of a threshold in the algorithm that will trigger a trade, and if the market is being wishy-washy, that threshold could get triggered over and over and over again. This can really hurt the performance of the system, but it can also do the opposite and give you overly rosy backtest results. So in NinjaTrader, it is possible to go and sort the performance stats by date. So I would do that and keep an eye out for days where the system takes a ton of trades. Next, always consider the maximum drawdown. This is the one that so many people miss, particularly the new traders. The system might be profitable, but if the maximum drawdown is too high, you're going to blow your account anyways. If the drawdowns are steep, you have to consider if the strategy is really any good to begin with. And here is another example of where using Monte Carlo analysis is really important. This will give you a more clear idea of how bad the drawdown could really actually get. Finally, consider if the stats are really showing enough edge to work with. As I've said before, things rarely work out as well as you expect at the beginning. So if your system is bringing out like a 2% edge, you have to consider if that's really enough wiggle room for you to work with, because it may not perform that well in the future. All right, man, that was a really long video. Aren't you glad that I broke it up into 4 different parts? Anyways, I will see you guys when I stream in the morning, 8:20 Eastern time. Love to see you guys there. In the meantime, stay profitable, friends.